Hello, and welcome to another episode of Financial Market Insights for Traders. I'm your host, Sophia, and today's episode is one that couldn't be more timely or relevant in today's market environment. We're going deep into demystifying trade wars and geopolitics, with a special focus on how trade tensions, like the ongoing US-China situation, impact global markets, what investors should watch for, and actionable strategies to manage risk, and even seize opportunities in uncertain times. We'll also explore how tariffs affect the stock market, smart techniques for investing during a trade war, and how to recognize and hedge against geopolitical risks in investing. And yes, I'll be giving you resources to stay ahead of the curve, including a fantastic platform for trading and a podcast recommendation I know you'll love. So let's dive right in. Segment 1, what is a trade war? So first things first, what exactly is a trade war? A trade war is a kind of economic conflict between nations. Instead of bombs and missiles, countries use tariffs, import restrictions, and other economic tools to punish or pressure one another. Usually, it starts with one country imposing tariffs on imports to protect domestic industries or respond to what it sees as unfair practices. The other country retaliates, and things escalate. Now, the most talked about example in recent years? Of course, it's the US-China trade war. It began back in 2018 when the US started slapping tariffs on Chinese goods in response to allegations of intellectual property theft and forced technology transfers. China retaliated, and before we knew it, hundreds of billions of dollars worth of goods were being taxed. Even though there have been attempts at negotiation, like the so-called Phase 1 trade agreement, the reality is that tensions are still simmering beneath the surface, and trade has only become one piece of a broader geopolitical rivalry. Segment 2, how tariffs affect the stock market. Now, let's break down the mechanics of how tariffs affect the stock market, because this is where things really start hitting your portfolio. Tariffs are taxes on imported goods. And when businesses face higher costs due to those tariffs, they often have to make some tough choices. Higher costs for companies. Let's say a U.S. car manufacturer relies on steel imported from China. If a tariff is imposed, the cost of that steel goes up. That company either eats the cost, cutting into profit margins, or passes it on to customers, which could reduce demand. Inflation for consumers. If prices go up across the board, you get inflation. And that affects consumer spending, which is a huge engine of economic growth, especially in the US. Earnings pressure and market reactions. Investors watch earnings closely. When margins shrink or demand softens, companies might lower their forecasts or miss earnings targets. That usually sends stock prices down, especially in sectors like tech, industrials, agriculture, and retail. Market volatility. Markets hate uncertainty. And that's exactly what trade wars bring. One presidential tweet, one tariff threat, one new regulation, and the markets can swing wildly. Some sectors are more vulnerable than others. Technology companies, especially those tied to global supply chains, often take the biggest hits. Semiconductor stocks, for example, are especially sensitive. Then you've got agriculture. US farmers were hit hard by China's retaliatory tariffs. And industrial companies too, who rely on global logistics and materials. Segment 3, geopolitical risks in investing. But here's the thing, trade wars are just one piece of the geopolitical puzzle. As an investor, you also have to watch out for broader geopolitical risks. These include things like armed conflicts like the Russia-Ukraine war, sanctions that affect everything from oil to banking, political instability in emerging markets, cybersecurity threats and espionage, and even shifts in global alliances, like the BRICS nations trying to create a non-dollar trade system. These risks can trigger capital flight, currency volatility, supply chain disruptions, and investor panic. So, if you're investing internationally, or even in multinational companies, you need to pay attention to what's happening on the world stage. Segment 4, strategies for investing during a trade war. All right, so with all that said, what can you actually do as an investor? Let's talk strategy, specifically investing during a trade war. First, diversification. Geographical diversification can soften the impact of regional disruptions. If your portfolio is 100% tied to one country and that country gets caught in a trade war, you're going to feel it. International ETFs and global mutual funds are great tools here. Second, invest in domestic driven sectors. Companies that generate most of their revenue domestically, like utilities, healthcare providers, or regional banks, are often more insulated from international tensions. Third, hedge with safe haven assets. During periods of uncertainty, investors often flock to U.S. Treasury bonds, gold, and certain currencies like the Swiss franc. These can act as a cushion during downturns. Fourth, stay agile with tactical allocation. Don't be afraid to rebalance your portfolio more frequently. If the trade war narrative escalates, reduce your exposure to cyclical or trade sensitive sectors and lean into defensive plays. Fifth, focus on innovation driven sectors. Governments often respond to trade wars by investing in their own domestic industries. For example, both the US and China are pumping money into semiconductors, clean energy, and AI. These sectors might see tailwinds despite the broader volatility. And finally, stay informed. Segment 5, resources to stay ahead. If you're looking to build a deeper understanding of these market moving forces, I highly recommend the Crystal Ball Markets podcast. It's a beginner friendly show focused on trading, investing, and macroeconomic trends, perfect for getting clear, no nonsense insights into how the financial world works. And when you're ready to take action, you need a platform that's as powerful as it is user friendly. I recommend checking out the crystalballmarkets.com trading platform. It's modern, intuitive, and packed with features for traders and investors of all experience levels. Whether you're executing trades or tracking global news, this platform helps you stay one step ahead. Segment 6, historical lessons from trade conflicts. Before we wrap up, let's take a step back and look at history. Trade wars aren't new. The Smoot-Hawley Tariff Act of the 1930s arguably worsened the Great Depression by choking off global trade. In the 1980s, the US and Japan had intense trade tensions, especially around automobiles and semiconductors. Sound familiar? While there was short-term pain, it ultimately led to greater global integration. And more recently, Brexit sparked panic, but also created long-term opportunities for savvy investors who understood the implications. The takeaway? Markets are resilient. They adjust, they correct, they recover. As long as you're staying informed and making thoughtful decisions, you're ahead of the game. Final thoughts and call to action. So, as we close out today's episode, remember this. Trade wars and geopolitics may seem intimidating, but they don't have to paralyze you. By understanding how tariffs affect the stock market, learning to invest during turbulent times, and recognizing geopolitical risks, you position yourself not just to survive, but to thrive in a complex market landscape. White Heavy Checkmark listen to the Crystal Ball Markets podcast for beginner-friendly breakdowns of macro trends, financial news, and investing strategies. Chart increasing gets started with the Crystal Ball Markets platform to experience a world-class, intuitive trading experience designed for modern investors just like you. Thanks for joining me today on Financial Market Insights for Traders. I'm Sophia. And until next time, stay smart, stay strategic, and stay invested.